Today is Sunday, about 1 on Eastern Standard Time in the United States, about 7 p.m. in Paris where I'm at. And today we're going to cover the state of the market, why things are so uncertain. We're going to cover also what you can be doing with your bags and how to think about the next few weeks. And more importantly, we're going to cover why I'm so bullish right now. In addition to covering why I'm bullish right now, at the end, we're going to cover how DCA may be being used against us, the retail investor. We hear about buy the dip, we hear about DCA, and maybe this is just further manipulation. I'll cover that because on Friday, I went with my sensei in trading, and he showed me things that I didn't really see that way before. The fear and greed for crypto in general is 27, as you can see. It's been pretty low. So now Trump has been playing these games with other countries in regards to tariffs and this sort of thing. So the market, in my opinion, and the investors, they don't really know what was really happening. And businesses are also freaking out because if the tariffs go up, they may not be able to keep their employees employed because maybe things get too expensive. They also don't know how to buy. Like, should they be buying now? Should they be worried that some wholesale item they can't get a hold of? And so as the stock market is trying to preserve their capital, we see a lot of weakness. Just a few hours ago, here it says 2 hours ago, Trump is downplaying the business concerns about the uncertainty, and it's in the AP News. So, it went out all at the same time. So with that being the case, and with it being a coordinated PR campaign, as we know, always happens with politics, and it's not a political statement against Trump per se, there is uncertainty. And we as retail have to act against it. Let's go to X. Another reason why we can be a little baffled, but at the same time understand what is happening is very, very clear, or could be clear after you hear Brian Armstrong after the Friday crypto meeting that they had in the White House. I'm going to go ahead and play it, and you'll see what I mean in just a second.
Brian Armstrong, Coinbase CEO here. The West Wing is right behind me. We just left the Digital Asset Summit at the White House. It was an incredible event, really a historic moment for our industry, and President Trump has breathed life back into the crypto industry.
So here he's saying that President Trump has breathed life back into the crypto industry, except by every measure, the prices keep going down. And so what is happening? In my opinion, I think that too many of us are depending on Trump or his government to create a bull run when in every single bull run, we didn't need it. So we are reacting to things that Trump is doing instead of telling our friends or investing ourselves and just looking at the market from an exterior point of view instead of being reactionary. In my opinion, Trump, by the way, has not breathed life back into the market. So this is Brandon Tusk, and I follow him, and he gives a very good point, and this is where I'm going to start talking about why I'm so optimistic about this bull run and why, for me, it's barely gotten started. So he points out that this is the 254 bars of that bull run and how we're doing exactly the same. Now, we had a little dip here at the end of the 2017 bull run before it skyrocketed, and here we're experiencing the same thing. He then goes into the RSI and he shows a very similar pattern that emerged. So this is just one more indicator of how this could be doing really well. So this is another tweet by this guy. He's a smaller account, but I've been following him for a while. And he shows how all these cycles are occurring and how there's a bear trap around month 6. Now, we are exactly in the same point. And in every single instance, it eventually goes up really high. Now, sometimes it goes up right away, like in 2021. And sometimes it takes longer, like in 2013 or even in 2017, where it kind of just went up a little bit and then went up. I will link to these two in the thing so you can look at them yourself. But there's no reason to believe, in spite of some volatility we're probably going to hit, to think that this bull run is over. Regardless of what Trump does, our space is expanding and people are going to make money from it. And that's going to require the prices to go up. And it's going to be made to go up because this whole thing is really manipulated. And we as retail, trying to get our own bags bigger, need to start to understand the psychology of what's happening. This is Miles. I think most of you know Miles. I like him. I don't agree with him all the time, but he does make a good point here where the index here for altcoins is now so low that when it's hit that in the past, it tends to go up. So here's another guy, and he posts this Jim Cramer video, and I saw this. This was yesterday. I freaked out because there is no better indicator of which way the market's going to go than Jim Cramer. And here in this video, he's saying to buy. Now, I was about to start putting this in the Discord group and warn you guys to sell everything. But then I even wrote a tweet that I had to delete. But this is actually from 2024 in November. And I was not happy. And I went on to call him an asshole and everything else. So I tried to be humorous about it, but I was really, really angry. So this is another, how many people saw the 24 and got freaked out and then walked away with another imprint of high quality that it's negative. Anyway, this is just another form of stupid manipulation. All right, let's get into the charts. This is the S&P. And we saw here on Friday that it broke a trend. You see that? So it continues to go lower than these points, right? And lose the support. And we can't really tell on this chart where it's going for Monday. But you can see here, this is the volatility index. So it's going to find support probably here, okay? Now, we don't know. It could go lower just like this, but this is a pretty solid line over history for this volatility index, and this does the opposite. So are we going to get another peak up, which means that the S&P is going to go down? There is no real, there's a little bit of support there, but then people are buying back in here based on the order blocks. We'll see. Does it stay or does it continue to go down? Now, this is Bitcoin. And if we look at this, what we see is that we're at the 82 range. But there's not really that many order blocks going down until about 73. So just the slightest amount of bad news could really send it. So I'm going to see if I can get the volume here. So you can see here with the volume that there's actually really, compared to over here, in here, even when it goes up, there's little volume right now. So if we get bad news, this could go down all the way to this range, which would actually meet these two tops here. We broke this line that goes all the way back to 2021. If we also go and look from the January top, which I covered in a previous video, to where it eventually bottoms before going up, last time it was 31, at this time of the bull run, this time was 31%, and before it was 37%. And maybe it taken a little bit longer, but look at this. If we go from the top here all the way down to here, it's about 33%, which is right around the same area. So it's not crazy to think that we may get some more volatility and go down to this range. And if this goes down, then the alts are probably going to go down. So I have on this chart these two possible areas where it can go down. One is 72 or 73, and then even as low as 69. And this is a range based on the buy order block that you can see here as well, from, in this case, from Coinbase. All right, let's look at the 4-hour chart of the total 2. So this is everything but Bitcoin. In a previous video, I drew it like this. And I mentioned that if it didn't hold, I thought it was going to go like this and then go up, but it didn't. It went the other way. And then it got really scary and it looked like it could go all the way down, but then it didn't confirm. And now if we extend it, we're still in this channel. Go like that. And so, you know, this is the 4-hour chart. Maybe better to put it on the daily chart. So if you look at the daily chart, you know, we're still doing okay. Like it hasn't really broken through and confirmed. So this is scary though, but it may just go all the way to the support line and then bounce off, as you can see here from here. If it were to break through that, then we'd be really in trouble and the alts would really go crazy and go down. Do you understand that? Like this is everything but Bitcoin, and this is a pole, and this is the flag. And so we expect this is a very bullish indicator normally. And so as long as it's in this channel, we can expect for it to continue to go up. But here's a major support. And if it breaks through that, then it may continue to go down, which means that the altcoins may continue to bleed all the way through this range. And the entire alt caps bleeding almost 20% is painful. So we're going to talk about a strategy to kind of prepare yourself when I talk about DCA a little bit later. All right, what is this? So this is dominance. This is another really bullish indicator. The last time we were in this range over here in February, March of the previous bull run at this time, Bitcoin dominance crashed. And what happened after that is that the altcoins went crazy. So we are at exactly the same point in terms of Bitcoin dominance as we did and were in the last bull run. So there's absolutely no reason to think that this bull run is over, that this bull run is somehow different. You know, it's a little different maybe, but we're doing just okay. So this is the altcoin market cap. And we were seeing this chart already, but this is when altcoins exploded, and it's the same point of the Bitcoin dominance going the other way. So this is Aave. And you can see here, this is my personal trading chart. And each of these green arrows represents a time when I made a purchase. These orange lines indicate when I, like for this, I'm going to sell it here, which is right on this trend line. And this one I'm gonna sell here, and these two guys will be sold up here. Okay. Now, the reason why I'm showing this to you is because on Friday I was sitting there with a professional trader who's been trading for like 20 years, more than 20 years. And I meet him quite regularly when we review my trades. And he had never really seen my charts. He'd only seen the lists. So I showed him a chart like this, and he goes, "What's all this green stuff over there?" I go, "Or these are trades that I bought before." And he asked me, why did I stay into those trades when it's gone down so much? And I go, "Oh, because I didn't want to experience a loss by selling, a realized loss." And that may make sense in some cases, like for tax purposes or whatever, but for most people, probably not. And considering that from the last time I traded this to now, it's been what, 30, 36 days? And in some cases, as you'll see, it's been a lot longer. So he said, okay, so let's go to a different chart of the same coin. And I did that. And this is Abe. And these are my three. That's this here. So if we're going in time, right, we're looking at this chart and we're going, okay, so we're buying here because we think that this here is a support line, right? So, oops. So this is a support. We bought it there. Right now it's a support. And that makes sense. You have all this here support, there's some support, there's some support. So it's not a bad buy. But then what happens? It crashes. Okay? And now we know that when you lose, you're going to come back to test it, and it may continue or not. So he said, if you know that, as soon as it went below, and even if you waited to something like here to sell it, why didn't you sell it? I go, because I didn't want to experience the loss. He said, that doesn't make sense. So if we keep watching, now we have this other support line about here, let's say, and it's trying to get through, and then it continues to go down. So at what point do we eventually have to sell those? Because if you look at this and go all the way down, that's a 40% thing. And if I had just gotten back in and bought, let's say, even here, even though I lost money because I sold it here, I would have gained it back. Does that make sense? I want to give you another example. This is Pinlink. Now these are my purchases from the past. I keep DCAing. I'm super bullish. And here we have a pretty solid support. So, I bought some, right? Just before he would hit it. This is just 2 days ago. But he says, okay, so look at it without. So if I go back here without any of the markings, like this is pretty clear that this is a support area. And it went below, and then it became resistance. And then we got faked out over here. So at what point do we go, okay, let's buy back lower? Because even if any of, like, from here to here, it's 53%. So even though I would have experienced a loss from here to here, it's only, like, let's say 27%. So I could have bought back in at a lower price. Now this is something you have to practice with, but it is possible. Now another reason why I have Pinlink here is because if you look at the chart that I'm using to take care of my trading, it looks like it is a trip with just sell pressure, and it can make you feel very bearish. But if you go to the coin market cap and you go, oh, Gate.io, and also has quite a bit of volume, and then you go to the Gate.io chart on the trading view, you'll see that there's actually some really good support here. So we actually can then draw this line with a little bit more confidence, even because there's support. All right. And then let's look at one more, my favorite now. I'm kidding. I'm just trading it to make money. We got Ondo. So here, I bought it here. I told you before in a previous video that I wasn't a fan of Ondo, but I have to admit it's going to go up. So here, I bought it. And now I'm going to sell it when it gets to here because I expect it to go up to here. But I could have sold it earlier and then bought it back, and it'll most likely hit here, and that would have saved me, I would have been able to buy so much more, 20% more, and not experience such a terrible loss. So I probably will just DCA and add more cash drawn though at this point. But I just want you to get the idea that we're told to DCA, but what we're not told is to learn the basic charting techniques so that when major levels are broached, rather than losing all that money, we can sell and then buy it back. And some influencers say, no, you'll lose your shirt and everybody always loses. But the evidence would suggest otherwise. And so on this channel and on some other channels that are out there, just trying to get you guys to understand that to make money requires some effort. And DCA is who's telling you to DCA and not do anything else. Well, that's the big guys, right? People like the Buffetts and so on. So rather than just blindly DCA, we have to learn how to recognize the levels and also condition ourselves to buy after it's been red and then sell when it's been green instead of doing what everybody else is doing. Well, not everybody else, but most of the people doing that aren't making money. And if you don't feel like you're not making enough money or you want to be making more money, then you have to really start to concern yourself with what I call the manipulators' common language in charting. No matter, every professional that's looking at these charts will look at this chart here or this Bitcoin chart here, and they have all agreed that when it goes here, that something's going to happen. That when it goes here, something's going to happen. And they don't have to even talk to each other. And we, the retail, when we see it going up like this, we're like, oh, yay, let's go buy some more. And then when it gets to here, we're like, oh, let's sell. And then we get our money taken out of our pockets, and they take it and put it in their pockets. And this is why we have to learn how to read this chart and learn their language so that instead of just buying the dip, because sometimes a dip is really a dip, and we can just go ahead and maximize our profits and not lose our behinds, our asses on in this game of trading crypto. All right, so let's going to end on this chart. Here we have Bitcoin, and unfortunately, we have one of those language points. We have a pole there, and then we have a flag here. And as much as I want to give you good news, right, this looks like a bear flag, and we have to consider that there's a strong probability that we go back and retest these levels. And I'm not the only one that thinks that. The majority of the traders out there also think that the time to buy back is right in here. So that's the message. It's a very, very bullish macro environment. In spite of what's happening, crypto is under control. There's no reason to expect anything else but a regular bull run. But if you walk away with anything else, is we have to learn the language of these professional traders. We have to learn how to manage our money, and we have to take the time to actually apply them, because no matter what industry you're in, if you're going to make money in it, you're going to have to make the effort, become a professional, and really, really treat it like you want to make a lot of money. And I know that some people will say, my friend bought a coin and it went up 100 bazillion times and he made $16 billion off a $100 investment. And he got lucky. Yes, and you can get lucky with the lottery and with gambling and stuff like this, but there's actually a way to take crypto and these charts and take it away from gambling into something that's relatively predictable 70, 80, even more percent of the time. So if you made it this far, thank you. Please subscribe to the channel. Please like it, tell your friends, and have a good rest of the weekend, and pay attention till tomorrow. Good night.